Investors are worried that they can't beat politicians in stock market investing, and the concern is valid. 46 members of the 118th Congress have violated the federal insider trading and conflicts of interest law. Let's start with Senator Tom Carper from Delaware. Tom has violated the disclosure deadline required by members of Congress 3 times in 14 months. Tom's failures included late reporting of his spouse's U.S. Treasury bill transactions, which in and of itself, it's Treasury bill, not a big deal, and 3 stock sales, which include PayPal, Taiwan Semiconductor, and Barrick Gold Corp. Carper did report his recent purchase of Target on May 22nd, so let's take a look at it. Now remember, I own Target. I have Target for many reasons. Do not buy a company just because somebody on the internet has it. But I'm very glad to hear that Senator Carper has Target. So let's do a quick analysis of Target. So Target here, down a little bit today, 146, hit a high in the last year of 180 back on April 1st, just a little over 2 months ago, a low of 100 back in October, all-time high of 250 back in 2021. Mo, you don't own any Target, do you?
I do not.
So my thing on Target is, I think they got blasted because of the whole woke thing. Mm-hmm. And I think they also had issues with theft.
A lot of theft.
Yeah, but they've closed some stores.
Yep.
And this is a company that is selling for about 15 times earning. And I still think that Target, even though it's retail, is going to do a good job on direct to consumers. Women love going to Target. It's kind of like a little day for them. I don't think Target is going anywhere.
Good online presence.
Now, good returns on invested capital, 5-year return of 14.5%. And I'm sure Senator Carper was probably watching our channel, and I'm the one that probably triggered him to buy the stock.
Probably.
Let's see, where
Seems
was
legit.
it? Ironically, he filed on May 22nd at 139.98, which was the low of the last 3 months.
That is ironic.
Oh, so he did buy it.
It's pure coincidence.
Wait a second.
It's coincidence.
Listen, you got to understand, guys. I do question, do these people in Congress have insight? I mean, they have so much access to so much information. I did this in the last video. We brought this video back because it was so incredibly popular. But you got to sit there, and I look at these Congress people, and I'm like, guys, gals, just focus to being in Congress. Why even get yourself involved in stock trading? Why even offer yourself an opportunity to get attacked like this? Don't you think, Mo?
I mean, if you can make a lot of money and not get in trouble, why not?
You know how you're going to make a lot of money?
How?
Go to Congress, do a half-decent job, work your way up, spend 5 or 6 terms there, then go get a lobbying job or go to a speaking circuit afterwards. Look at Mo looking at me like I'm an idiot.
Yeah. Why would you do it that way? You could be corrupt.
All right, but I still don't necessarily believe that everybody in Congress has inside information, but let's go check out what analyst estimates are for Target. About a 50% growth over the next 5 years in their EPS, a little bit over, 840 to 1332. Almost double-digit growth every year, so a lot of potential here. Revenue growth, 3-4%, nothing exciting.
Ought to be more.
So what's my stock analyzer say about Target? Well, let's pull it up. The last time I did it, I did some assumptions here, 2.5, 3.5, 4.5, margins of 3 3/4 to 4 3/4, PE and price of free cash flow of 15 to 21, and a 9% return. Because remember, guys, I don't do any margin of safety in these videos. This is a 9 or 10% market return. But remember, if you want to own individual stocks, it's important to put a margin of safety because the future is unknown. We're humans, we make mistakes, and valuation is an art. It's not a science. But every investment is the present value of all those future cash flows. Mo, what are your thoughts on my assumptions here?
I like them. Them.
I appreciate that.
Revenue could be a little bit low, but who knows?
Oh, you think so?
Yeah.
See, I actually wanted to go lower in the revenue
Really?
growth. Yeah, I wanted to go 2, 3, 4. Wow. Hit the analyze button. I got a low of 128, a high of 230, middle price of 173, and he bought it at 139, 140 or so. So I think he has a pretty good price on it. He's up a little bit potentially on that investment, but again, it's just so early in the game. We don't know where he is right now. Shady politician number 2, Rick Allen from Georgia, $17.7 million net worth. Mo, does he really need to be doing that with a $17.7 million net worth?
That's a lot of risk for...
And Tom Carper, almost $10 million. Really? Guys, I'm just as capitalistic as everybody else in the world. But at some point, you got to draw the line.
At some point, you don't take the risk.
Now, Mr. Allen was the most significant violator of the federal insider trading and conflicts of interest law in the entire country. Allen, it was as much as 6 6.5 years late on reporting 136 stock and other financial transactions on an August report. Guys, 6.5 years late. I'm not saying months, I'm saying years. And this totaled between $3 and $8.5 million. So he's now a buyer of Ameriprise Financial. So let's take a look at that. Ameriprise Financial, AMP, which is also Mo's nickname, ironically. Major player in the U.S. market for asset and wealth management with around $1.4 trillion in total assets under management. 10,000 advisors, one of the largest branded advisor networks in the country. About 80% of the company's revenues comes from asset and wealth management business. So kind of like a T. Rowe Price. Yeah. Some things I like about Ameriprise. Look at this. 1 year free cash flow, $4.9 billion versus $3 billion. 5 year free cash flow, $4 billion versus $2.6 in net income.
You probably like that too.
Yeah. High return on invested capital. 9 times price to free cash flow. Wait a second, Mo. Are we overlooking a really attractive business? Ooh, what is this? $44 billion market cap, 160 enterprise value. Is it because they're holding a lot of assets so they owe that money out? Is that the liability they have? Probably. That could be it. Wowza. Big growth rate. All right. This might be an interesting one to look at. Let's see what analysts are saying. All right, EPS, not much growth in earnings per share, guys. $35 a share going to $42 over the next 4 years. That's what, 20% growth in 4 years, 4 or 5% compounded. Not great, but revenue growth, pretty solid, mid to high single digits. So they're going to make money as their assets go up and as they get more advisors selling more stuff, right? So that's going to be a big key for Ameriprise Financial. Now, I've never done Ameriprise Financial, I don't think. Have I?
No, I have not.
I have not. So let's start an analysis there. Mo, give me some low, middle, and high revenue growth numbers. 10 years, and we think the market's not going to be the best.
You want to do 1, 3, and 5?
I actually think I'm fine with that. I was going to say 0.36, so 1.35 is great.
That would be fine also. Profit
margin? Now, 10 years, they did 16%, but lately they've been at 19%. So what would you put in? Actually, it doesn't even matter. You know why? Look at their free cash flow. That's what I care about here.
Yeah, 15, 17, 19 for profit margin. I mean, significantly
I would do 15. I would do 16, 19, and 22 maybe. And free cash flow of 24, 27, and 30.
Yeah.
How does that sound?
That's fine.
PE?
14, 16, 18.
Same with the price of free cash flow.
Yeah.
And a 9% desired return. Guys, the big key here is their free cash flow is significantly higher than their earnings. Big key there would be understand why that is. Okay, so we want to understand that before we go forward. But in the analyze button, man, yeah, the stock's currently at 420. We got a low price of 468 on free cash flow, high price of 909. Remember, these returns include that dividend because it does pay a dividend. So make sure you include that. So maybe Mr. Allen is onto something. Now, guys, maybe free cash flow here isn't as useful. Our in-house analyst, Dalton, said, Paul, I think it's more like American Express, where they make a lot of money off loans, but this is something to look into. And if you're part of our community, tag Dalton, he's Wicked Willie, tag him in the community up here at the top and start asking questions about it. And I'm sure he will take a deeper look. Number 3 on our list, making another return. Tommy Two-Tone. Did I call him Tommy Two-Tone last time? Tommy Tuberville returns to our list of law-breaking politicians in 2021. He violated the Federal Stock Act by failing to disclose over, ready for this one, 130 trades on time. Also, this past September, he purchased up to $250,000 worth of stock in telecommunications company Qualcomm. Qualcomm is a federal defense contractor, and he did this all while serving on the U.S. Senate Committee for Armed Services. Guys, this does feel like he might have had information. Again, we're speculating here. Qualcomm and its subsidiaries have been the recipient of several dozen defense and homeland security contracts during the past 2 decades. And this is according to the articles that are in the description below that we're citing. All the information we're giving you is based on those articles. So let's look at Carnival Cruise and see why Tommy Two-Tone might be buying it. Remember, Carnival Cruise Line is one of the few companies I bought, made money on, and then realized I was wrong and was able to sell before I lost money. So this is Carnival Cruise Line. Guys, it had its big fall right before COVID, hit an all-time high of $72 back in 2018. Guys, I'm not going to lie to you. This is a hard one to look at. The financials are a mess. The debt's insane. The revenue is up. Look how bad their revenue got. It got as low as $2 billion in 2021. Now they're at $22.5 billion, which is a high from history. And yet it's hard to make money for them. Just like Southwest. They've only made $400 million in the last 12 months. They've lost money every year since COVID. Big numbers too. What is that? $26 billion since then. The reason I was wrong on Carnival was I had a thesis based on less shares and less debt than they actually have right now. And I thought, okay, it's too diluted. It's too heavily laden in debt. This is not what I thought I was buying. So I exited. Mo, any insight you have on Carnival that I'm not seeing here?
No, I had the same thesis at the time, made money, happy. But at this point, I would not buy anything like this.
Yeah, remember.
Except for the reason that this guy owns it. Now I might buy it. Just kidding.
Tommy Two Tones. I wonder how many times we're going to have Tommy Two Tones on this recurring bit that we have with our...
I'm sure he's just been busy with legislation. He just forgot to file.
That's the point. Guys, you're trying to run this country. Just focus on that. Put your money in low-cost ETFs and put it in a blind trust. Let somebody else run it. Just take that distraction away and go focus on what you were hired by the constituents to do. Congressional lawmaker number 4, Professor Dan Newhouse. I call him Professor because look at this picture. Does he not look like a professor over here?
Does.
He definitely has a sports coat with a patch on it. In another report, Newhouse failed to properly report up to $765,000 in personal stock transactions. In some cases, reporting them over a year and a half late. Newhouse reported 61 separate transactions, each in the $1,000 to $15,000 range. Only 10 of these transactions were in compliance with the Stock Act's reporting deadline. Newhouse disclosed stock purchases and sales across a variety of industries, including tech, financial services, agriculture, pharmaceutical, and companies such as Apple, Citigroup, Tesla, Deere, Eli Lilly, Marathon Petroleum, and Next Era Energy. So, Mr. Newhouse, Professor Newhouse is worth $17.4 million. Thank you for wasting our time with doing your transactions here. Appropriations Committee, analog devices with a company of his choice, ADI. This company is currently at basically an all-time high. 241 was the all-time high just back at the end of May. And it's got a 52-week low of 155 back in October. Low return on invested capital. Mo, look at this, 4 or 5%. I wonder what he saw in this company. He clearly isn't watching our channel. Lower PE, so more free cash flow than net income. But even the free cash flow, it's a 38 times free cash flow, 41 times the last 5 years. Pays a dividend of 1.5% that eats up a big chunk of their free cash flow, about 60% of it. Gross margin, 60%. Why is their return on invested capital so low? Geez, oh, Pete. With high revenue growth, this is interesting. Wonder why that is. Let's see their financials here. Oh my God, look at that growth, Mo. Oh, look at their revenue. It's plummeted in the last 12 months. But yet it's near all-time highs. Isn't that interesting, guys? Isn't that interesting? Isn't that interesting?
Probably a coincidence.
Okay, so let's see what analysts are saying about this, because let's look at the rev. I'm going to go to the revenue. Well, look at this, Mo. So they have a 26% drop this year, and then growth from there in the double digits. So definitely some rebound here.
Yeah.
But Mo, look at this. EPS growth, 41% drop this year, going right back up to 15. But isn't it interesting it's selling at all-time highs? Isn't that bizarre?
Yes.
So a stock is sitting here, and its revenue is off by double-digit percent. All-time highs, though, with EPS dropping 41%. That's extremely, extremely interesting to me. You know what? I don't even need to do stock analyzer tool. It's already selling for 38 times free cash flow right now with a big drop in revenue. So unless it's going to grow insane amounts from here, I think it's hard to justify. Don't you think, Mo?
I agree. I wonder what the purpose was of this one for him.
Yeah, maybe he knows something we don't know. But the other thing is, he's probably just like other people. And what other people do, they just buy things because they know somebody, they like somebody, or they have some whim. He probably doesn't do analysis to buy stocks. That's a very common thing. Just because somebody's in Congress doesn't make them smart. Just because somebody's rich doesn't make them smart. You're seeing this video. If you want to see our last video we did that was a huge success with Marjorie Taylor Greene, Nancy Pelosi, and the other crooks in Congress, click on this next link to watch the next video. If you want to learn more about our community and our software, click the link in the description below. We'll see you next time.